Evan Roberts, Chesapeake Brokerage. Thank you for being here.
Thanks for having me, man. Happy New Year.
Happy New Year. What is it, the second?
Yeah, man. Right back at it.
Let's do it. So Chesapeake Brokerage is based in
Owings Mills.
Owings Mills.
Yep.
And if you will, tell the viewers what you do.
Great. Yeah, so I've been with Chesapeake Brokerage for coming up on 7 years now. We are a independent life insurance brokerage agency, BGA. It's kind of a mouthful, if you will, but really what we do is we partner with financial professionals to help them uncover insurance solutions for their clients. And really our niches are in estate planning, succession planning, and personal financial planning.
Okay, so Chesapeake Brokerage helps insurance agents help their clients.
Yeah, absolutely. So we have access to 30 plus insurance carriers and really have expertise in substandard risks, and then also the 3 areas that I just talked to you about on the design front.
Okay, so going into that, the estate planning, what is that exactly?
So estate planning can be a ton of different things, but really what it boils down to is wealth preservation, if you will. So people that have a significant amount of wealth, whether it's a tax issue or not, they need to find a way to transition that wealth to a spouse or to a next generation or to a charity, or however they have goals set up and whatever their plan says, and insurance can be a very positive solution in that overall estate plan.
Because insurance, the death benefit, is tax-free.
That's right.
Perfect.
Man. Exactly.
Succession planning, to me, sounds a lot like estate planning. So what's the difference?
Yeah, great question. So it is very similar when you think of the concept of it. It's a transition, right? But succession planning is with a business. So business owners, whether you want to sell it to an outside buyer that you have lined up, or you're trying to find that outside buyer, or whether you have somebody that is rising up the ranks of your company and they're going to be the ones with their name next to the door, and they want to buy the existing owner out. Succession planning, again, life insurance really can be a valuable tool and solution that will help them implement that succession plan.
Okay, awesome. And before we jump into the personal insurance, I've heard you talk about the business succession planning. You used the term golden handcuffs.
Yeah, so that's another area of succession planning where it's more about retaining the right team, right? So if you have a top salesperson who's really driving revenue for your company, or you have a admin person, or you have a management level person on your team that really you cannot afford to live without. They may be getting offers from competing firms in the area, and you really need to find a way other than your group health benefits or your 401k to retain them for until they're ready to retire, so that you can achieve this constant growth that they're bringing into the company. Then Golden Handcuff is a solution that utilizes insurance to retain that person. And essentially what it does is it's a properly designed permanent life insurance policy that the owner of the company can fund the premiums for. And the way permanent insurance works is, if designed correctly, the cash value grows tax deferred. And so you're the top salesperson over here at Mountain View, and so essentially it would be Mountain View owns a policy and they fund it for you, and they say, as long as you meet goals and criteria that we stipulate, you have this pool of tax-free cash sitting there for you at your retirement date.
So they can access that when they retire.
Exactly.
But they have to stick around.
They have to stick around. So hence the golden handcuffs. There are certain vesting schedules that you can implement as the owner of the company that say you have to meet these goals in order to have access. It's kind of, the carrot dangling in front of the horse, if you will.
I love the concept. So if someone doesn't stick around, if that person does not stay with the company to retirement, what happens to the policy?
Yeah, so there's different things that can happen. It all depends on how you've kind of programmed it to work, or what stipulations you've laid out in the agreement that you and the key person sign off on. But if they pass away or they leave, then a portion of it can be going back to the business owner as a cost recovery mechanism. And that's something where all of the cash value or all of the death benefit goes back to the business owner, or a portion of it. Again, it just depends on the type of agreement that you have.
Interesting.
Yeah.
So we've hit on estate planning, succession planning, and the third thing you said Chesapeake Brokerage does is personal
Yes, exactly. So insurance for personal financial planning. So this is where we would help an insurance agent. We really, like I said in the past, we like to partner with the financial professionals that we work with. So ideally, we like to know what their financial plan looks like. And that's how we'd be able to help them dictate how much insurance is necessary and what type of insurance is necessary.
What type? So what types?
Yeah, so term insurance, permanent insurance, long-term care insurance, but with personal financial planning, term and permanent is always a conversation that we're having.
Okay, so term insurance, life insurance, permanent life insurance. What are the basic differences?
Yeah, so term insurance is to essentially pay a tax-free lump sum to your beneficiary if you die too soon. It's pretty simple, right? So if you're going through a personal financial plan and you didn't make it to retirement,
Okay.
there's several years of revenue that you have to make up in order to put your family in a position that they expect it to be in. So the death benefit pays out tax-free and it can help mitigate that risk.
I like it. And then permanent lasts, instead of a term, 20 or 30 years, permanent lasts how long?
So it's supposed to last for forever, right? But there's a lot, the marketplace changes on a very regular basis with insurance products out there.
Right.
Some last on a projected basis for forever, some last on a guaranteed basis for forever. It just depends on what product you go with.
Good point. So how do you figure out if someone needs term or permanent life insurance?
So on the personal financial planning side of things, if they're older, they're retired, and they still need a death benefit, typically permanent insurance is a great solution. It's cost effective.
Okay.
If they're younger, permanent insurance makes sense in a couple of different ways. Really the one that we're seeing a lot of recently is they're calling like an overfunded life insurance
I like
plan.
calling it super funded, overfunded.
Overfunded, adequately funded, I've even heard.
Yeah.
And essentially what that says is if you are a highly compensated person, you're maxing out your 401k, you're maxing out your IRA, you're doing everything you need to put away money for your retirement plan.
Yep.
There are contribution limits on those types of plans.
Good point.
With life insurance, there are no contribution limits as long as you stay within the guidelines of life insurance.
So certain buckets for retirement have caps or maxes you can contribute.
Yeah, absolutely. So those company, 401ks and IRAs that you have, there are limitations, and on the life insurance side, there's not. So it's a great complement to your overall financial plan. And the real benefit is the money that grows inside of a life insurance policy, designed properly, grows tax deferred, and then when you're ready to access it during retirement, it's income tax free.
Oh, wow. So when you are retired, you had this policy for, say, 30 years. Now you can access cash value.
Yep.
Tax-free.
Exactly. Yeah. It's the great benefit of life insurance. And then again, if you pass away, you still have that death benefit or whatever is left of that death benefit. So it's a very powerful tool to implement in the right strategy.
Wow. So Chesapeake Brokerage, 3 main things: estate planning, succession planning, and personal life insurance, long-term care planning.
Yep, absolutely. And to add one more thing, I would say that we are really good and specialize in substandard risk underwriting.
I didn't know that.
Yeah.
I know you mentioned it earlier, but substandard being someone who has an ailment,
Yes.
who can't get insurance on the regular market.
Yeah, exactly. And you think, there's a lot of people that just think that they can't get insurance. They've been underwritten 10 years ago or 5 years ago, or they had an ailment pop up a year or two ago, and they just, automatically, assume that they can't get life insurance on the regular market. With the relationships that we have and the experience and expertise in substandard underwriting, we're able to derive appropriate offers for those clients.
So the person with cancer 10 years ago may be declined by the regular carriers, but there may be someone who's going to offer them someone.
Absolutely, exactly. And it's all about just understanding the underwriting file and the medical file and presenting it in a positive light to the right person.
Okay.
Yeah.
Well, thank you for being here.
Thanks so much for having me. I appreciate it.
Every time we meet, I feel like I get a download of knowledge and information, so appreciate it, man. Maybe later this year we can do another one.
Yeah, I agree. I think, the market's always evolving, so it's a great thing to just constantly be updated on.
Let's do it. Mr. Roberts, thank you.